So this assignment is based on the learning in the managerial accounting class that you all took and the material that was in chapter 12 in that book. And my goal for giving you this assignment is to have you get comfortable with some of the key parameters and some of the relationship in income statement and balance sheet. I will not be covering any accounting in this class. I will not go through any debits, credits. Purpose of understanding financial statements and using it for financial analysis is to be able to make management decision, to be able to do strategic analysis, to be able to look to see if investment is beneficial or not. So some of the parameters that are important, as you know, the total asset, we know if I want to know the total asset, it is the sum of current asset and net fixed asset. So if I know two out of the three, I can solve for the third one. Total asset is total equity plus total liability. Total debt is sum of short-term debt and a long-term debt. Total equity is a combination of investors' equity when they start out with, and as they add back retained earnings, etc. So here basically we are backing into what we do not know. So for example, what I did, and this is what I recommend, from a business analysis or problem solving perspective, you always want to take the information that you have and lay it out and kind of back into it. So for example, the red ones are the information that I plugged in that we know. So now the first question was, what is the current assets? And so we know that if I take my total assets, it should add up to my net fixed asset and my current assets. So if I know my total assets, I know my net fixed assets, then by default, I can go figure out what my current asset is, which is the $90,000. Same thing with the current liability. We can back into it, and it would be $45,000. The question number 3 is, what is retained earnings? Retained earnings obviously is owner's equity plus retained earnings is total equity. We know what the total equity is, they gave it to us. We know what the owner's equity is, they gave it to us. So in order to look at the relationship, which is the total equity is the sum of owner's equity and retained earnings, the answer would be $30,000. Question 4 is, how much is accumulated depreciation? This would go in the balance sheet, and the balance sheet side over here on the left, we know the net fixed assets are calculated by taking the gross fixed assets, and you subtract from it the cumulative depreciation that is taking place, up till that point in the balance sheet, and then we get the net fixed assets. So in this case, we knew the gross fixed assets, we knew the net fixed assets, and we would back into the accumulated depreciation. Okay. Number 5 is, what is another name of gross margin? Based on the options given in the multiple choice, the only one that will fit would be gross profit. Number 6 is, where would you find cost of goods sold? Obviously, you would find that in net income, so the answer would be net income. Number 7, where would you find interest expense? And again, information options that were given to you as in multiple choice. The interest income would be in the income statement because that's where it belongs. Number 8, calculate the earnings before interest and taxes. So they gave us the sales, they gave us the cost of goods sold, they gave us the R&D, depreciation, SG&A. So basically, income statement is sales minus cost of goods sold will give you the gross margin or gross profit. Subtract R&D, research and development, depreciation, SG&A, or any other operating expenses that you may have. Anything other than interest and taxes, anything other than interest and taxes will go above this line, and that's the reason why it is called earnings before interest and taxes. So any expenses that are other than interest and taxes should be up here. So in some cases you may find there may be other things, some operating expenses, some facility expenses, they will all go up here, and then your earnings before interest and taxes in this case is going to be 150 minus 80 minus all the other expenses that we have, and we get to $50,000. Question number 9 was calculate the net income. To do net income, we need to figure out the when they gave us the interest expense. From there we can figure out the earnings before taxes. Now, because we have accounted for interest, obviously from the earnings before interest and taxes, we take the I out. Now we have earnings before taxes, which is 45,000. And then the next question, I think, was to calculate the net income. They gave us the taxes. We can get the net income, and the tax rate will be taxes paid on earnings before interest and taxes. So taxes paid is going to be 10,000 divided by 45,000, and will be 22.22%. So I hope this is helpful.